right, so here we go. Chapter 11, accounting for purchases with a transactions using a purchases journal. All right, so our objectives here are, first of all, we're going to go back into our time in the general journal because we've been talking about specialized journals up to this point. Now we're going back to explain the purpose of a general journal again, kind of in a different light. And then we're accounting for purchases, returns, and allowances. So we've been going through the whole purchases thing. Now we're talking about what happens when we buy something and we decide for whatever reason we need to return it. What does that look like from an accounting perspective? And then we're going to post a general journal to the accounts payable ledger and general ledger. So we are now using general journal to make some transactions. They're going to post to that subsidiary ledger of the accounts payable. Remember, we have the controlling account, accounts payable, and we're going to get into more of that as well. So a bunch of different things going on for the first time, really, in our general journal. Okay, so here we go. Just a reminder, general journal, 2 amount columns in which all kinds of entries can be recorded is called a general journal. Remember, in the special journal, we have special columns. In the general journal, we just have the general debit and the general credit. Now, we've been talking about the purchases journal and the cash payments journal, but what happens if we buy not purchases or merchandise? What if we buy something like supplies on account? Supplies on account, like office supplies. What journal would we put that into? Can't put it in the purchases journal because that's for purchasing merchandise. Can't put it in the cash payments journal because that's only for buying things with cash and not on account. So what do? We would record an entry like that in the general journal. Okay, so just be thinking about that. All right. And not every transaction can be recorded in a special journal. So in this case, this kind of a transaction does not belong in one of our special journals like purchases or cash payments. And then think about what happened if you received merchandise, it was either the wrong kind or was damaged or whatever. These kind of things go on all the time. How might you journalize or record that entry within your organization? That's what we're going to be getting into here. Now, here we have a memorandum. The memorandum is just keeping track. It's like a source document because, again, we want to have a source document that goes with our transaction. It's a source document reminding us to do something or documenting something we agreed upon. Attach invoices for supplies bought on account. Okay. And again, it's used for special messages within the company. It ensures that the invoice received for supplies bought on account is not recorded as a purchase of merchandise. It's a purchase of supplies, like office supplies. And again, a memorandum could be any kind of official information that we want to use as a backup for a transaction. It could even be an email, some sort of documentation or communication within the company that gives approval for whatever it is we're trying to record. So in like an electronic accounting system, we might scan or even take a picture with our cell phone, some sort of a document, and upload that to our accounting system to show the documentation for that particular transaction. So here we go. We're buying supplies, again, office supplies, not merchandise, on account. We're buying it from SD Supply 165.25. All right. And here we go with our T accounts. We're going to increase supplies, which is an asset, with a debit. It's like we always have. And we're going to increase accounts payable with a credit, 165.25. Now also keep in mind that we've got that subsidiary ledger going on off to the side. Accounts payable, just our controlling account. So we're going to have to record that as well. So here's our general journal. Do a little analysis here, what's going on in our general journal. We got the date, just like we've been doing before. Debit, Memorandum 42, debit amount, the credit account title. And notice we've got accounts payable and we have SS Supply, the vendor from our subsidiary, our accounts payable subsidiary or sub ledger. And it's being credited. There's our diagonal line. The reason we put a diagonal line in post reference is because we're going to post that actually twice. We're going to post it to accounts payable. At the same time, we're going to post it to our subsidiary ledger. So we're going to do two different post references in that post reference area. And then finally, of course, we're going to credit that account for 165. Okay, let me go back there really quick. Hold on. Sorry about that. Okay. And again, we're going to have to record that in our vendor account. So it's going to be like twice. And that's why we're using that diagonal line, just like I just explained. I'm kind of looking at my notes over here as I go through this. Okay. So a couple more things. That's buying supplies. Well, now we're going to record what happens when we return something. So credit allowed for the purchase price of return merchandise resulting in a decrease with that particular vendor is a purchase as return. All right. Credit allowed for part of the purchase price of merchandise that is not returned, resulting in a decrease in the customer's accounts payable. It's called a purchases allowance. Now let's think about why we would do these things. What are some circumstances that would force us to return product, merchandise product that we'd received? Obviously, it's damaged. It's not the right kind. We received too much. All kinds of different things, right? Well, why might we be credited by the vendor for stuff that we bought, but we never returned it? Think about that. Well, maybe it's just not worth, and you'll see this with Amazon like all the time, or other companies where they'll just say, hey, just keep it and we'll credit you because it's not worth our time of bringing it back in, the freight coming back, the restocking of that, the reentry of it into the system, all those costs. The vendor might just say, hey, we know we had a problem. We gave you something either you didn't want or was sub quality or whatever. So we're just going to credit you and you just keep it and do whatever you want to with it. That would be a purchase as allowance. We're not actually returning something, but we would get credit for it. And a form prepared by the customer showing the price deduction would be a debit memorandum. So we're debiting the customer's account. And it's kind of confusing because we're doing a debit memorandum, but we're crediting our account. Terminology, right? We'll get into that. Okay. And also, now we'll show this in a bit here. Purchases and returns and allowances might be explained better on the next slide, is what we call a contra account. We talked a little bit about contra accounts, but we're going to get into that more in detail here. So here is a debit memorandum, which again would be the documentation for the return of those goods, quantity of 2, $21.95. For some reason, we returned this product and we're going to reduce the amount. Again, we have a credit balance in accounts payable. We're going to be debiting accounts payable. Maybe think of a debit memorandum as that way of we're debiting a charge account that we owe something on. That's kind of a terminology thing, isn't it? So what would that look like? Return merchandise to Mobley Tools, 4390, covering purchase invoice number 528, debit memorandum number 38. Okay, so here we go. We are going to debit, because again, we're returning stuff that originally we got billed, and we recorded that as a credit to accounts payable. Now we're returning product, 4390. We are debiting accounts payable. At the same time, we would be debiting the subsidiary ledger for Mobley Tools for their particular vendor account, excuse me, in the accounts payable subsidiary ledger. Then we're going to be crediting purchases, returns, and allowances. Now, what is the natural increase side of purchases, which we've been doing in the previous chapter? Well, I'm hoping you're going to say it is a debit. It is a cost of sales, cost of goods, purchases. Well, ordinarily when we buy stuff, we debit purchases. But now we're returning stuff. We're not going to credit purchases because we want to keep track of how much stuff we return during the year. That's something we want to measure. So rather than crediting purchases, we're going to credit this account called purchases, returns, and allowances, which is a contra or opposite of purchases. Now, it will net out in the end. We want to keep track of how many returns we make during the year. And as we get into this, we're going to get into a lot of different contra accounts or opposite accounts to what the original is coded. Like in this case, purchases ordinarily as a debit, purchase returns and allowances as a credit or a reduction of purchases. And that would look like this. Here is our general journal, the date, the account title, and the vendor, because we're going to be posting this to the control account in our general ledger, and we're going to be posting it to the subsidiary ledger to the vendor. We put first of all, we do the document number, of course, over here, DM38. And then we're going to do a diagonal line because later on, when we post this, it's going to be posted both to the controlling account, accounts payable, and the subsidiary ledger. We're going to debit $43.90. Accounts payable would be a reduction because you're going to get accounts payable as ordinarily a credit increase side. It's going to be a reduction in accounts payable. Purchases, returns, and allowances will have a credit of $43.90. And I think I'm cutting off the words credit there. There we go. All right. There's my picture, moving that out of the way. All right. Okay. So what does that look like from a general ledger standpoint? Here we have the dates down here, the journal page number being posted down here, the debit or credit amounts. Again, now we're posting to the accounts payable, the subsidiary ledger. In this case, the original transaction for buying supplies on account, we're going to credit $165 for SD Supply. Remember, it's natural credit balance. We then will record a new balance, $820 credit plus $165.25 credit, gives us a new credit balance. Okay. And then down here from Mobley Tools, then we go back, we go back and post in the second part of the post reference, we're going to put the vendor 220. And we kind of skipped over Mobley Tools here, the 5-step process here. Mobley Tools, we ended up debiting for $43.90 right here. Date, of course, post reference. Now they use G12. The past, I think we just used 12. They use G12 or general journal 12. All right. And whoops, let's go back there. We debit Mobley Tools for $43.90. That's going to be a reduction of the amount that we owe. So we had a credit balance of $41.82.15. Subtract that $43.90. We're going to have $41.38.25, our new credit balance. Here is our general ledger. We're going to post supplies store. Now let's go back here. Hold on. Because they posted here we go. We have supplies stores. We got the date. We have the journal page number, G12. Here we have the debit amount to supplies stores. We have a new account balance. We just increased the debit. Supplies, again, is something at the end of the month. We'll see how much we actually use by taking inventory of it. And down here we have accounts payable at the same time. Post reference, credit of $165, natural credit balance. We added $165 to come up with a new balance of $13,186.30. That's in the general ledger. The previous page, we had the accounts payable or subsidiary ledger. Now we have the general ledger. What's going on there? Then, of course, we go back and we post. Now it says we posted the vendor number. That is a typo, which I didn't notice before. That's the account number, not the vendor number. Okay. We're in the general ledger. Okay. So I need to go back and fix that typo there because that is incorrect. That's the general ledger number. We're posting the account number, not the vendor number. What did I have on the previous slide, by the way? I'm curious. We had the vendor number there. They just got lazy and they used the same word there, didn't they? I'll fix that. All right. Quickly review when or why is a transaction recorded in the general journal, thinking about previous chapters. Why would we record something in the general journal instead of somewhere else? Well, it's when the transaction cannot be recorded in a special journal, like we did with supplies. We can't record that in the purchases journal because it's not for merchandise. We can't record it in the cash payments journal because we bought it on account. All right. So we record it in the general journal. When is the equality of debits and credits proved for a general journal? Good question. Really, it's after each journal entry is recorded. Now, later on, we're going to get into entries where we might have 3 debits and 4 credits. We always want to make sure before we move on that those debits and those credits equal. Now, if you're using an electronic system, it won't let you move forward. It'll make sure that your debit entries and your credit entries match. What is the primary difference between a purchaser's return and a purchaser's allowance, which we just talked about? Purchaser's return is you actually returned it. Purchaser's allowance is they're giving you some adjustment to your account. They don't want it back. It's either bad, damaged, too much, whatever. They just don't want it back. You just keep it, and they'll record the difference. Again, you might have experienced something with this as a consumer yourself with not returning something. Say, hey, just keep it and we'll credit you. Okay? If purchaser returns and allowances decrease the value of purchases, why are returns and allowances credited to a separate account? It's a great question. Why don't we just credit purchases? Because again, we're improving our information. I'm not going to read verbatim what's down there. We're improving our information. We want to know from one fiscal period to the next of all the stuff we're buying, how much has ended up going back or being as bad or whatever is being credited to purchases, returns, and allowances. Okay. That's something we want to keep track of because if we have a particular vendor that we're recording a lot of returns and allowances from, we might want to start looking for a different vendor, right? This is information that our business can use to be most efficient. Okay. All righty. Let's go to Working Papers 11.1. Whenever I do this in demonstration form, I'm always kind of shaking in my boots because I'm like, I don't have you guys in class to keep me honest here, right? So here we go. We've got 2 entries. We bought supplies on account from Melam Corporation and we returned merchandise to Griffin Incorporated. So come out here, down here to the general journal. Step 1 is our date. What are we debiting? We're increasing an asset called office supplies or supplies dash office, I think. Okay. Post reference is memo 57, as the problem says. We're debiting that for 532. The credit side of that, and by the way, this is in journal page number 12. The credit side is that is going to be accounts payable because we can't record it in a special journal. And we're doing that to Milan Corp. We don't have to re-record the document number, of course. Credit of 532. And on the 7th, recording merchandise, return merchandise to Griffin Incorporated. What are we debiting? we're reducing accounts payable. We're going to reduce the amount that we owe Griffin Incorporated. So we're going to say accounts payable slash, because we're going to record it to the general ledger, but also to the subsidiary ledger, Griffin Incorporated, period. And that is debit memo number 32. Debit 248. Okay. What are we crediting? Well, that's going to be purchases, returns, and allowances. I hope I spell it right there. There we go. Okay. Credit for 248. Again, we purchases and returns allowances is a contra or opposite to purchases, which is in our cost of sales area of our chart of accounts, which I should go up here and illustrate really briefly. Okay. Now they're showing that in expenses, purchases, purchase discount, purchase returns and allowances. That's technically correct, but later on it'll be in an area called cost of goods, cost of sales, if you like. We're kind of showing it as an expense for now. That may not have been the best illustration there. Great step one. Hopefully we hit that one out of the park. 3 out of 3. Thank you. Next step. Now we go to post it. Okay. So supplies office 532. This is going to be G12 for General Journal 12. So we're going to say on the 5th, G12, we're debiting for 532. And I'm always psycho about just trying to use my head here, but 2948 plus previous debit amount, office supplies, adding a new debit for 532, new balance 3480. Again, at the end of the fiscal period, we'll take a physical inventory of supplies and determine how much we actually used. That's account 1145. Put that back in the post reference area. Okay, next. Now we're assuming that we put a slash in post reference. We have to post this transaction here twice, one to the general ledger, and then one to the subsidiary ledger, which ties to our general ledger, right? Accounts payable is the controlling account. Blonde Corporation is a vendor account in our accounts payable ledger. 532. So I'm going to go to accounts payable on the 5th. On the 5th. G12. Credit 532. And again, I have a previous credit of 8493.5. I'm adding 532. Give me 9025.5. That's account 2110. Now, this is where it gets a little tricky here. 2110, then a slash. And now I've posted it to the general ledger. I'm just going to leave that for red for now. Then Malam Corporation. Now I'm in the subsidiary ledger, not the general ledger. I need to go in on the 5th, G12, 532. I have a previous credit balance of 1443. I'm adding 532. 1975 is my new balance in Alam Corporation subsidiary ledger. And again, at any point in time, I should be able to roll up all the vendors that I have in accounts payable ledger and tie to the balance I have in the controlling account of accounts payable. So up here, I've got Malam as account number 250. Again, that is a vendor account, Not a general ledger, so I'm going to say 250 up here. I recorded that twice. Now, because we're not using a special journal, that's why we have to record it twice. In the general journal, it's going into two different places, which in the end will talk to each other. All right. Next, by the way, let's just double check here. Okay, we're good there. All right. Next, we have a debit of 248 to accounts payable Griffin on the 7th, 248. You know what I messed up down here? Did you see what I did down here? Oh my gosh, that's just bad form. I put that in the wrong. Oh, that's a credit. Hello. I don't know what I was thinking. Anyway, who knows what I was thinking. On the 7th, again, G12. Now I'm coming back and saying, hey, I returned something for $248. So now I have a debit of 248. Keep in mind, I had a previous credit balance of, I'll just do this, 9025.5. Now I'm subtracting or debiting to accounts payable 248. I'm reducing accounts payable on the debit side. Remember, it has an ordinary credit balance, 877.5. That is account 2110 slash, because I also have to record that to Griffin Incorporated. Can you tell me that I put, yeah, that's 7th. Okay, I got that right on. 7th, G12, debit 248. And I'm in the subsidiary ledger now. Don't get confused as to why are we posting this twice? Well, because one's, again, general ledger, we're only posting once. Our debits are going to equal our credits. We also have to record our subsidiary ledger, which is the detail for accounts payable. Previous balance for Griffin was 958. I'm debiting or subtracting 248 because I don't owe that to them anymore. Net, I now owe them 710. They are vendor account number 220. I'm going to come up here and say 220. Post to the general ledger, post to subsidiary ledger. Then purchases, returns, and allowance is going to be a credit for 248. That's going to be on the 7th. G12. Again, that's a contra or an opposite to purchases, 248. It has a ordinary credit balance because it's opposite of purchases. So I'm going to take my previous balance of 4194.60 and add 248. Give me a new purchases, returns, and allowances balance of, what was that again? 442.60. 4442.6. Thank you. Yes. Let's get the 0.6 in there. And that's account number 5130. Show that here. Okay. Again, I use G12 as my post reference for where it was coming from. All right. How did I do with that? Hope I did good. Hope I didn't mess up anywhere. I hate it when I mess up with these. I got 2 out of 2. All right. And now you will continue on with you doing the on your own. All right. So thank you for watching. And by the way, one thing I didn't say was the electronic system, a lot of this double posting, like accounts payable ledger, subsidiary ledger, stuff going to the general ledger, that's going to all happen all at once with an electronic system. So we're going through the manual process. And also with an electronic system, it's going to be posting like all the time. Whereas if you have a manual accounting system, you want to make sure you're posting frequently, maybe even daily before you leave for the day. So your vendor balances, what you owe your vendors, are updated every day. All right, just some things to note there. All right, thank you again and have a great day. And let me know again if I can be of any help to you. Take care.